Hi guys, so it's been about 2 months since I've done a Trading 212 portfolio update, and mainly it was because there wasn't that many changes. There weren't that many changes, my grammar is terrible. But I have changed some stuff now, so I thought it's about time to do an update. And I know a lot of you have been asking to see how my portfolios are doing in the current downturn. So I do think a lot of my positions are massively suffering. But we're all in this together and we're not going to panic sell. So as there aren't many changes generally, I thought that going forward I would structure these videos as follows. So initially I would do a what's changed, so any sells, any purchases, etc. Then I would do a this is how the rest of the positions are doing. And then finally do a this is what I plan to change in the next few weeks, or generally where possible. So obviously there aren't always going to be planned changes, but if there are, then I'd do those separately. Okay, so without further ado, let's jump straight into my Trading 212 portfolio. Okay, so starting off with what's changed. So within my invest accounts, RDS, so Royal Dutch Shell, I have added 5.3 shares here. So I'm currently on 7.3 shares, as you can see. And it's currently up 7%, which is pretty decent. So considering this is a fairly new investment for me, I'm quite pleased with that, especially with everything else that's happening in the market. Unilever next. So I've added 2 shares to Unilever. So currently sitting at 35.11 shares, and it's currently down 13.5%. And this is about £200, so it's quite a lot. As you can see, it's pretty much been trending downwards for quite some time, pretty much since September last year. And I've had a look, and the latest downturn seems to be because they attempted to buy GSK, or at least the consumer goods arm of GSK, and they failed. So I believe they made 3 attempts and all 3 got knocked off. So that is why currently Unilever is suffering. But I'm still a firm believer in the brand, and I don't want to sell out. I'm not going to sell out. They have a brilliant dividend as well. So as you can see here, they've got a 4% dividend yield currently. So I do get pretty decent dividends from them. So yeah, sticking by, and we'll see what happens. Royal Mail next. So I've added about 1 share here, and currently sitting at 24.355. And it's currently down 11.3%, which is about £14. But I did get a pretty decent dividend from them this month. So as you can see, I got about £6 on the invest account, and then a little bit more on the ISA. Mainly this is because they also issued a special dividend. The other 2 changes on the invest account are that I sold out of 2 Starbucks shares and my 0.6 of a Tesla share. Honestly, no reason for it. It's not that I want to sell out of the companies, it's just that I hold them in other places, and I wanted to withdraw some cash from the Trading 212 portfolio to move across to my eToro portfolio. So essentially, I recently became a popular investor there, and I wanted to add to my portfolio a little bit to increase the diversity over there. And as you know, I'm building my house, so cash is scarce at the moment. And yeah, that was the only reasoning. They were in profit, so I didn't lose anything. I made quite a bit of money and then just reinvested it across at eToro. In terms of the ISA, I also disinvested. Is that the right word? I don't know. I basically exited out of the daily dividends portfolio. There were just too many small positions for me, and I was sort of done with it. So I asked them to exit that pie, and I essentially have therefore reduced some positions through that. So they weren't conscious decisions to reduce, but for example, Johnson & Johnson has reduced by 0.07, Apple has reduced by 0.2, AT&T has reduced by 0.47. and Starbucks has reduced by 0.26. So again, none of these were conscious. I want to reduce my holdings here. They were just part of that pie and therefore got disinvested. I'm going to use that word even though I don't know that it's a real word. So in terms of increases in the ISA, so once I disinvested from that pie, I obviously had some money. So this is how I allocated it. Realty income, I have added 9 shares to Realty. Currently sitting at 32.09 shares, which is about 1,500, well, almost 1,600 pounds, and it's up 4.6%. Now, if we have a look here, we can see that it's actually giving me now about £5 of dividend per month, which is awesome. That's basically 25 zloty in Poland. This Vanguard S&P 500 ETF, I have added 0.76 of a share, so I'm currently on 1.6 shares here, so about £100 in this one, and it's also up about 4.8%, so pretty bad as for S&P 500, but at least it's in the green, which I can't say for a lot of my positions currently. Now the proper one, so VUSA, I've added 7.548 shares, so it's currently sitting at 14.318 with a value of just under £900, and again up about 4% currently, so £35 in profit as it stands. Royal Mail, on this one I have also added 2 shares to this one, mostly because it's down, so I'm dollar cost averaging, so 4.2 shares currently, just under £20, and down 11.8%, but percentage-wise it's a lot, money-wise it's only £2, so again a fairly decent dividend, so I'm quite happy to keep them. I have also added 0.04 shares to Alphabet, so Google, currently at 0.07 of a share, so still tiny, but about £143 here, and up 6% currently, so about £8 up. Not huge, not going to get rich off of it, but starting that investment into Google. National Grid, I've added 7.4 shares here, and I'm currently standing at 94.86 shares with a value of just over £1,000, and it's up 22.6%, which is brilliant. Translates into about £189. National Grid has again awesome dividends, currently 4.6% dividend yield, and as you can see here on history, my last dividend from them was £27.80, and I believe I'm due another one soon, I think this month potentially. So yeah, pretty good. Okay, so now let's have a look at the shares that haven't changed, i.e. I've not sold or added to any of them, but if you're interested in how they're performing, this is how it's going. So if we start off with the investor account, AMD is still doing really well, despite this massive drop, as you can see here on the chart. So still sitting at 5.7 shares, which is about £518, up 46.8% currently, which is a gain of about £165. And if you remember, I think recently it's been insanely up for me. And part of me wishes I'd taken the profits and reinvested now when it's dropped. But you can't time the market, and this is what I'm trying to avoid doing. So ideally, in the ideal situation, what I would do now, if I had the spare cash, would be to add to AMD. Amazon next, so 0.28 shares here, currently down 5.6%, so about £37 down. It's actually more of a loss if we discount the FX impact, but obviously as an overseas investor, it does impact my positions. But yeah, as with everything, it's currently dropping. I do believe tech is dropping quite a lot as well. So like I said, don't panic. AstraZeneca, so 10.5 shares, £925, currently 7% up, so not too bad. It's dragged itself up. It was down for a while for me, so I can't be complaining. I'm up £63 on this one, which is pretty decent, and it will be interesting to see where they go. Beyond Meat next, one of my biggest disappointments. So it's currently down 52.5%, so about £60 down. It's incredibly disappointing. Beyond Meat was so promising, and as you know, if you follow me for a long time, I don't eat meat. I haven't eaten meat for 7-8 years or something like that now, so this was one of the investments that I'd made purely based on belief and, oh my God, I love this product. Everyone I know loves this product. If you've ever read One Up on Wall Street, this is part of the principle of actually you can outsmart investors sometimes because you know what's happening on the ground. And yeah, it's not really worked out so far. I'm not going to sell it though. I never really sell at a loss unless I would be really worried about the company going bust, which I'm currently not with Beyond Meat, but it is definitely one to monitor. iShares Electric Vehicles ETF, so it's plodding along. It's not massively increasing, but it's not really dropping. Steady 7%, so just about keeping up with inflation there. 40.9 shares, £239 value, which is about a £16 gain. Pfizer next, 1.9 shares, about £78, of which £23 is profit, so almost 42% up. And I'm keeping this investment but wrestling with myself because ethically I don't want to be invested in this company, but I'm already invested. So do I keep it and wait it out and see what happens, or do I strike and sell? I mean, not that I think it will make even remotely any kind of difference to Pfizer, but just for my own principles. But yeah, anyway, so let's head over to the ISA now, and we kick off with AbbVie. So still half a share pretty much here, £54 invested, up 44.7%, so keeping strong despite the current downturn. I do think healthcare generally is one that is fairly stable, so definitely worth sticking around. And AbbVie has a 4.15% dividend yield, which is mainly why I keep it. So I did say that my investment in Apple had decreased, but it wasn't a conscious choice, so I'm sort of putting it in here. So 0.75 shares in Apple, currently up 28%, which again is pretty decent because there's been a bit of a downturn lately. Equates to about £20 in profit, but again, my investment in them wasn't massive, so it can't be that much of a gain. AT&T, so we've got £17 in AT&T. It's currently down 8.5% rather, but as you can see, it has increased from the pits that it was in, so it's a good sign for sure. Currently 7.6% dividend yield, so we'll see whether they can keep that up. I'm not convinced. It's pretty much why I'm not adding too much to AT&T, although I do need to go through their earnings report, so we'll see what happens there. Comcast, 2 shares still, up 12.15%, so currently sitting at £77. Dover, still one of the better performing ones, currently 37% up, so I've got 0.26 of a share, and it's currently sitting at £34. Enviva, so I believe this was a free share, and it's currently up 64%, and it's worth £54 currently, so £21 of that is profit. iShares FTSE 100, so currently 30.5 shares, sitting at £223, which is up about 11.67%, so £23.34 profit. iShares Physical Silver ETF on here, Still 7 shares, £121, down 17%, so not performing too well. But this one fluctuates for me quite a lot, as you can see on the chart here as well. Johnson & Johnson, one of my favorite investments, is currently not performing too great, but like I said, it's currently in the green, so that's good with me. Up 3.5%, so £548, which is about an £18.50 profit. Microsoft, no change there. So currently £65 in this one, of which £15 is profit. So just under 30% gain. But again, you can see that big dip at the top there. So it's currently down from what it was. Tesla next, so no change on the ISA investment. I know I mentioned I'd sold it in my invest account. So currently sitting at 0.169 of a share, so £124, of which £60 is profit. So it's up 91% currently, which is insane. It's performing really, really well. But I actually have it in my stake portfolio as well, which I got recently, and it's down about 4% there. So it just depends on when you invest. Starbucks next, so 2 shares here, no change, £141, down £12.60, which is about 8.2% down. But you can see that massive drop here. It is really, really difficult when you just see so many shares dropping. But at the same time, for me, in a weird, comforting way, the more of them are dropping, the safer I feel, because it just means there's something wider going on and it's not just one company where I'm like, oh my God, what's happening? So just staying calm is key. Okay, so that's the portfolio done. In terms of any plan changes, I don't actually have any for my Trading 212 portfolio. Essentially, the changes that I'd planned to make, I've already made. So as you saw, I got rid of that daily dividend pie and I've reallocated slightly. So that's pretty much it. All I'm going to do is increase my positions whenever I can, when my cash flow allows, but we'll see how that goes. But yeah, that's pretty much it. Hopefully this has been useful, and thank you so much for watching. I'll see you next time. Bye.